Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the recent weekly candle close and the key weekly levels you need to be paying attention to. We are also diving deep into the short-term charts, discussing exactly what is happening, the recent correction for Bitcoin, the key levels, and next likely moves. We'll also be jumping over the total cryptocurrency market and Bitcoin dominance charts at the end of the video. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in taking your trading to the next level, join us in VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chats, our trading chart and education chat, our daily video, news, help, and trade setup chat. Check that out, guys. Nearly 700 members. Join up by clicking the pinned comment in the free channel and clicking my name, or messaging me via, again, my name, or clicking these links for more information. Check it out, guys, and let's jump on in. So as we can see, Bitcoin has had a very rocky last few days as we have been pushing between this 60,000 and now 64,000 high. We're seeing a whole heap of chop develop on the short term as Bitcoin has been basically bouncing up and down now throughout the entirety of the weekend between our 62,000 and 64,000 high points. We're going to be discussing exactly what is happening here and what you should be paying attention to in our short-term analysis today. Moving over to the weekly, we did of course have our weekly candle close. The weekly candle close itself was a bearish candle. This of course was a bearish engulfing candle, but on the positive aspect of that, we were able to sustain above the $60,000 level. And we're going to be discussing in today's video the key levels and justify why we need to break above these levels in this current weekly candle, as well as go over the worst case possible scenarios. But moving over to the market data to start off, 24-hour volume and 24-hour liquidations. Let's take a look. 24-hour volume up 121% at 154 billion, and 24-hour liquidations up a massive 226% at 247 million. Of the 247 million in liquidations, 139 million have come from long positions and 107 million have come from short positions. Looking at the DXY has been able to breach that symmetrical triangle pattern yet again, sustaining currently within that pattern. At the moment, guys, the key levels we are watching are going to be this horizontal support and this yearly long diagonal trend line. If the DXY is able to sustain within this range and push higher, this, of course, is going to be very, very bearish for risk assets. But if this is nothing more than just a fake break-in and we see a correction and rejection from here, that is going to be incredibly bullish for risk assets. As we know, when we do see times of conflict with the developments in, again, the Middle East becoming more severe and continuing again in the limelight of the media, we generally see more fear build up. And as that fear builds up, the DXY generally moves toward the upside and asset prices come downwards as money flows back into the dollar as a store of value, quote unquote. So we generally do see the DXY move upwards, which is what we have seen. So it is going to be very interesting to just simply observe the DXY in the coming week. Watch how that price action develops. We are watching for a correction here. That is what we are expecting and that is what we are hoping for. But now that we are within this channel, we are in this symmetrical triangle, the possibility for continuations are present if we are able to close this weekly candle within. So watching very, very closely on that chart. And the S&P 500, guys, again, not too much changed since our last video. We are still sitting above these weekly highs. At the moment, while we sit above our prior weekly high, we are expecting continuations into 6,000. That is the expectation. However, if a weekly candle does close below this solid black line, which is sitting at 5,680, if we get a weekly candle closing below that region, that is going to mark a deviation, and we will very likely see a continuation back to these yearly lows. Therefore, that could mark a pretty large correction for the S&P 500 and for risk assets overall if we do get that deviation confirmed and the DXY does move upwards. Until then, we are expecting continuations while these weekly highs hold. We are expecting bullish continuations. That is it for the broader markets. Like we said in today's video, we are diving deep into the short term, discussing exactly what is happening here, whether or not Bitcoin is going to go higher, whether or not we're going to see those corrections back to 59 and potentially into that $60,000 region. And of course, we're going to be discussing the weekly candle, the total and Bitcoin dominance charts. Before we do get into it, guys, if you want to support the channel and help yourself even more, sign up to BitGet, BitUnix, or Binance down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. This has saved me well over 6 figures trading, probably much more than 6 figures, but it can save you a considerable sum in your trading fees. Again, 15% is no small amount. Do yourself a favor, sign up to those links, support me, support the videos and the channel, and support yourself. You just need to sign up to only one of those exchanges and trade there. We'll play an ad and we'll jump back in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get back into it, taking a look first and foremost at the recent weekly candle close. If we take a look at our recent weekly, we can see a pretty large red candle. Now, this red candle, of course, was a bearish engulfing candle, meaning the closing price of the candle was underneath the opening price of the prior green weekly candle. We have drawn two horizontal lines, first and foremost at the opening price of our prior green and the opening price at our prior red. These are going to be our weekly openers and weekly closes of the prior two candles. If we take a look, we have seen with that prior weekly candle a very large wick into our dotted trend line. The dotted trend line lines up with the $60,000 horizontal support, which we'll be discussing in more significance in the short-term analysis. The current weekly candle has a few different possibilities. There are a few levels we need to sustain and potentially even break above to see continuations. At the moment, this weekly candle is printing a top over here, which is bearish, and of course, we do run the risk of correcting deeper. So let's discuss in detail exactly what is happening. The bad points of this weekly candle, of course, are two things. Number one, we saw a bearish engulfing candle. That, of course, is a very bad thing. And number two, while we sustain below 63,566, which is the opening price of, again, the prior weekly, marking the bearish engulfing candle, we do run the risk of seeing an extended correction back into that 60,000 level. And if we drop below 60,000, we know the risk. That is, we could see a correction into 57 or potentially 56,000. So while this weekly candle sustains underneath the opening price of the prior green candle, we do have a risk of seeing continuations downwards. We are not out of the woods yet. Let's talk about the good things of this candle, what we need to see. If we see a weekly close above our opening price of the prior red candle, the prior weekly opening price at 65,585, that is going to confirm a bullish engulfing candle of the prior weekly, and more importantly, it is going to be a continuation candle in the current uptrend towards the range high. So if we do get the weekly close above 65,585, it is highly probable we do see a continuation to finally retest the range high of our macro channel yet again. And if we are able to close a weekly candle above 63,566, it is very likely we see a continuation to at least retest 65,000. So those are the key levels on the weekly we should be paying attention to. The overall summary is that the weekly candle was bearish. It is marked a point of which could potentially develop into an extended reversal, and we have not quite seen yet the retest of the range high. The current weekly candle is a very important one, as it is going to determine whether or not we see that move back to 60,000, or if we're able to start to take out these upper resistances to climb up to the range high. Let's take a moment to discuss this channel once more. The macro channel, of course, is going to be our descending channel formation. I would like to urge everyone that no matter what happens between the range high and the range low of the channel, the most important thing is that we are able to sustain the channel itself. This is now the longest consolidation, I believe, for Bitcoin. This is going to be a 224-day consolidation. The prior consolidation we had was going to be, let's take a look, 224 days. So we are week to week matching the longest consolidation we have seen for Bitcoin in the history of Bitcoin. This is an incredibly long consolidation now, 224 days. But as we say, the longer the consolidation, the larger the eventual reaction. Whether or not that be a reaction toward the upside, which we are expecting, or a reaction toward the downside, the longer these consolidations go, the larger the expected reaction from these consolidations do become. So taking a look at our descending channel formation, of course, while we are within the descending channel formation, we are in a downtrend, and therefore we are only expecting its upper price targets at the moment of which the price action is able to break out of the downtrend. The downtrend being marked by the downtrending diagonal resistance, the range high of the channel formation. The bullish channel, of course, which we can see is, of course, a bullish channel. It is a period of downward price action where eventually selling pressure starts to decrease, which we are now already seeing here on the RSI. We are seeing the volatility between the peaks on the RSI drop, and we are seeing the momentum itself flip positive, okay, which eventually leads to an inability for the bears to continuously push the price action back to the range lows, which increases the likelihood of a break upwards as the buyers step in and take control. And that is what a descending channel descending channel structure is representing. It is representing the extended tug of war between buyers and sellers, which eventually leads to an exhaustion on behalf of the bears as they are no longer able to continuously push the price action to retest the range low. Now that is the likely scenario, as a descending channel has a statistical probability in favor of continuations toward the upside, and if we apply measured moves to the channel, we take the range high to the range low, apply to the breakout, that will give us a perceived target of mid 80,000. Now there is a chance it just goes to hell and breaks down and invalidates the channel, but for that to occur, we would need to see a daily candle close below the range low to invalidate the channel. And only upon the invalidations of the channel would we see the upward target or the bullish target no longer become expected, and we would likely enter a macro downtrend. The reason I say we would likely enter a macro downtrend is because if we jump over to our weekly chart, we can see basically the channel itself, by breaking down or by invalidating the range low, as a consequence of doing that, we will have already lost the upper band of the Gaussian channel and the upper band or the upper cloud of the Ichimoku cloud, which would indicate, as per prior cycles such as over here, the initiation of a macro downtrend. So by breaking below the range of the channel, and invalidating the channel, that would essentially mark the initiation of a macro downtrend, which could spill over into a high time frame bear market. I do not believe this is the probable scenario. I do believe we are going to see continuations, and I will continuously say that until the validations are invalidated. And again, while we sustain above the upper band of the Gaussian channel, we are bullish. We are in a macro uptrend, like we saw over here, like we saw in every other cycle. While we are above the Gaussian channel, we are in an uptrend. While we are above the Ichimoku cloud, we are an uptrend. While we are in a descending channel formation where momentum is slipping positive and selling pressure is exhausting, the expectation is for a continuation higher. And of course, as we know, the market is dynamic. There are external influences that can change these expectations, such as global conflicts, of course, such as unexpected events that develop, black swan events, can significantly alter the course of direction for the price action, irrespective of what the chart suggests. But if we're going based on what the charts are suggesting, that is the likely outcome. Let's move over to the short term. As we can see, guys, we broke through that major monthly uptrend. This was September. It's funny because September was meant to be bearish, but we saw a fantastic month in September. October was meant to be bullish, and we have seen a very, very bad month in October so far. So it's kind of flipped on its head over here. Looking at the price action at a face value, the current resistance we need to break above is still going to be that prior range of resistance. So again, prior support becomes current resistance. We have broken through, that has become current support, and prior resistance still remains as current resistance. So for us to see a continuation into 66,000, mind you, 66,000 is where we need to close a weekly candle above to see a continuation upwards to a new all-time high. Like I said, a weekly candle close above 65,566 would likely result in a continuation into a new all-time high. We still stand by that. So for us to see that weekly close, we need to break above that 64,000 resistance. But at the moment, we can see Bitcoin has corrected from there numerous times. I've seen two corrections in the last 24 hours, breaking back towards 62,000. If we jump over to a short-term chart, let's go to a 15-minute chart over here. We can see on the 15-minute chart, a fair amount of support below us. The key level of support I want to mark out is going to be our sell side liquidity at 61,600. This is going to be our strong low. If Bitcoin breaches and breaks below this region, we are very likely to see a correction to 59,000. Okay, highly probable. We see a correction of 59,000 if this base of support is unable to sustain. However, while we sustain above this level of support, we can very likely see continuations back into the range high, and that is what we're going to be watching out for. So at what point will we be expecting those continuations to range high? Let's take a look at the shorter time frame price action and really zoom in. So as we can see, Bitcoin has been in a short-term downtrend ever since creating that top at 64,000. We're going to go ahead and draw our trend lines in. This is going to be a descending channel formation moving into our area of support, and of course on the RSI we can go ahead and match that downtrend, which is represented by bearish momentum. So as we can see over here, guys, we have got a downtrend in the price action, a downtrend in momentum moving into support. This downtrend is expected to continue until two things occur. Number one, until momentum flips positive, and number two, until the downtrending resistance breaks. At the point of which both of those things occur, we will likely see a continuation back into the range high, but until then, we might be able to see one more drop into that low point of support. Again, dropping below that base of support at 61,600 would not only result in the price action dropping below the horizontal support we just marked, but of course invalidating the descending channel formation, forcing a steep correction back to 59,000. Those are the key levels we are watching. The short-term price action has been incredibly choppy. It has been very choppy, but the next potential move we are watching for Bitcoin is going to be this descending channel forming into support. We've got our momentum developing downwards. We are watching for a positive momentum shift. We are watching for confirmation of a break, and then that is going to mark a nice continuation back into the range high resistance. Let's quickly finish up the video. The Bitcoin dominance chart is basically where it's been for the last, I don't even know how long, 3 months, right? We are sitting at 58%. Again, we are watching for corrections from here. A breakdown of this trend line is what we are really watching for. People are asking, when is altcoin season starting? Well, guess what? We break that trend line. I do believe that is when altcoin season will truly start, and we will see a strong rotation of money into altcoins. And again, there are so many more altcoins this cycle than last cycle, so it is highly diluted. It's unlikely we see an altcoin season like we have seen in the past, but we will still see a very strong altcoin season nevertheless. And moving over to Bitcoin, the cryptocurrency total market cap, and this is going to be altcoin market cap, focusing on the total. A very similar position here in comparison to the total market cap for Bitcoin. We are sitting above the midline and we have not yet broken out. This is really the chart we are watching. This is the key chart. This is significantly more important than the altcoin market, as the altcoin market is much more irrational and emotional. When we'll see a breakout of this downtrend, that is when we really know that cryptocurrency is entering a macro uptrend yet again. So guys, those are the levels we are watching. Watch out for the weekly. We have discussed the key levels on the weekly we need to watch out for. Watch out for the short-term development of price action. We do have a potential reversal coming up, and if we do drop much lower, particularly under 61,600, we do run the risk of a steeper correction back into that 59,000 low. I don't believe it is likely, but it is still possible while we are underneath that weekly point at 63,500. And of course, Bitcoin dominance and total, always keep an eye on there. Thanks for watching, guys. Catch you in the next video on Thursday. See you then.